This conference will now be recorded.
So I am assuming that you all have submitted at this point. And what I've done this week is last week starting off today, is to look at the first step that that we use in managerial accounting, and to get you focused on it and serious about it, because when we move through the problems, this first thing you do, if it's wrong, a lot of the problems are going to be wrong. So I just work on it for a week to get you serious. Now on this margarita, how much for the glass?
Mine said it's currently unavailable.
Yeah, see, I told you to go ahead. So you had to have one glass because you're given the glass. How much was the glass as part of the cost?
$5.
All right, $5 for the glass. Then you had 2 shots of the tequila. There are 20 shots in the bottle. The bottle costs $50. So how much was each shot costing?
$5.
Well, $2.50 per shot. You needed 2 shots, so that should be $5. That's correct. Then for the Grand Marnier, it costs $75, 25 shots. So that's $3, correct?
Yes.
Correct.
1 shot
Yes,
per
sir.
drink. So that's $3. Then your margarita mix, uh, 20, 25 shots in the tin. So how much is that?
$2.
Okay, that's about 50 cents. And then 5 times that is $2. Okay. So we got one bartender in here. Then the labor,
0.2.
that's 0.2. So when you add all those costs together, and then MOH was what?
3.
Okay. So what's our total unit cost?
18.2.
How much?
18.2.
Take your word. Is that a good word for everybody? 18. That's lower than what you had the other day, Kevin.
$15.20.
That's lower than what you had, Ashley. Okay. So, and Mike, what do you have?
$18.20. Well, I I had $15.20, but it should be $18.20.
Okay, so 1820 sort of looks like it. Selling price was 3, so what's this margarita gonna cost?
$54.60.
$54. 54.60.
What's our POR gonna be?
300.
Okay. Those drinks to be served, 50,000. And how many drinks does he serve per hour?
100.
100. So that's gonna be what, 500 into 150,000. How much do we get?
300.
Okay, I'll take your word for it. So this is what you expected to be able to do. Uh, so I tried to use something that I thought was realistic, but it looked like some people grew up and are living in convents. So uh, okay, so let's move to, and on your grades, I'll get to those. Number one, all my classes are kind of large, so when I Then I've got to look at the exams and what exam you took and everything, but I will try to get those out there. So the managerial accounting cycle, that's what we're working on. Assets equal liabilities plus stockholders' equity, that's still the foundation of what we're working with. And what you're told, and which is the case, is that first step in this process is coming up with that unit cost, selling price, and the POR. That's always the first step. And then we journalize entries. Well, these entries are based on these determinations. And so if they're not correct, we'll have problems as we go through. But we journalize entries, we post to the ledger, we prepare the trial balance, and we prepare the financial statements. But there are two new statements: cost of goods manufactured, cost of goods sold. Because we have to look at what we manufactured in a separate statement. It's not that difficult, and we'll get through it. Now, in making journal entries, you'll see that I put them in stages. There's a set of journal entries in stage 1, where we start the cutting and buy the raw materials. Then there's a second set of journal entries in stage 2, where we transfer costs to work in process when the products are produced. Then there's stage 3, where we transfer the cost of the completed items to finished goods. Stage 4 is sale of the finished goods. Stage 5 is payment of the selling expenses. So when you're working the problem, and we have a demonstration problem next time, and each team have their assignments in terms of stages. When journal entries are made, we just make them in these stages. And when they're in these stages, the journal entry accounts are going to be there. You just got to do the calculation. In stage 1, we buy the raw material. That's the first thing you do when you're going to make something. If you were making that margarita, you can't make it until you buy the raw material. And for each raw material, this is always the entry: debit raw materials inventory, credit accounts payable. That doesn't change. You just look at the facts, but this is the journal entry when you buy the item. And you're gonna, for as many raw materials as you have, you will make this entry. So in that last problem, we'd have about, I think, 5 of these. We had the jar for the glass.
So Mr. Boyd, Dr. Boyd, for example, if we would consider all the raw materials would be like tequila, the Grand Marnier. We would make a journal entry for each one of those as a
You
credit,
gotta
a
make
debit and a
a
credit.
journal entry for each one. We debit raw materials and credit accounts payable. Now make sure you're familiar with that example in case that's the start of your midterm. I go back and we work with our margarita example. You all appear to be closer to on target with that. Yeah, every time you bought one of those, the glasses, the tequila, the Grand Marnier, and the margarita mix, you would make this entry each time.
Dr.
You
Boyd,
know,
for that though, we'd have to figure out how many bottles of Grand Marnier, correct, out of
correct.
the 150,000 drinks we made, or whatever the total amount of drinks we made, how many bottles it would take, and that would be what our raw material would be, like 15 bottles of tequila or
Right.
whatever.
And we always are going to be high. That is, if you're in a bar, you don't want to run out. So you buy 3, maybe 3 bottles extra. So
Especially if we're
that,
selling for $45.
yeah. Okay. Let's look at stage 2. This is where we make the item. Team 1. And when we make these journal entries, we debit work in process each time. The first journal entry are the raw materials. We're gonna debit work, we bought them. Now we transfer them from the warehouse to the production floor. So when that happens, there's a journal entry to debit work in process and credit raw materials inventory. Then these workers are working. And so we're going to debit work in process and credit cash to pay them. Finally, for all of this overhead in here, utilities and everything else other than the raw materials and the labor, we're going to debit work in process and we're crediting manufacturing overhead. We are estimating the amount of overhead. We don't know what it's going to be for sure, but if we're accounting for the cost, we got to have all the costs there so that we can appropriately price. We'll calculate what it costs and how much we made. So we're going to estimate that overhead. But in stage 2, you're debiting work in process each time. You're debiting work in process each time. Got that, team one? Good. Then in stage 3, once the items are made, this is the journal entry. We debit finished goods inventory and credit work in process. So once the items are made, we box them up, and that's our goal, to make the items and then get them off the production floor into the warehouse for shipping the finished items out. In stage 4 is where we sell the items. So we're getting back to traditional financial accounting. We're going to debit accounts receivable, cash, and credit sales when we sell it. So we made that entry and we reviewed that entry. But we also, we're going to have to debit cost of goods sold and credit finished goods. So we've always done this, and this is why we had inventories in that second problem. So you debit account receivable, cash, and credit sales, and then you debit cost of goods sold and credit finished goods. So these are the journal entries. You got to calculate the amounts. Now, something else that will happen in this stage is that we have to estimate the overhead. So we debited work in process and credited manufacturing overhead. We estimated at $600. The actual overhead may be different. When it comes in, it may be different. But when we, in stage 2, we estimated that overhead at $600. And we credited manufacturing overhead. When the overhead came in, it turned out to be $610. So we didn't estimate enough, and so we're making entry debiting cost of goods sold and crediting manufacturing overhead. But we can't wait. We have to put our best guess of what the overhead is. When the actual amount comes in, then we'll debit cost of goods sold for that amount. And we'll talk about that. Then we pay our selling and administrative expenses. That's not a hard thing to do. Now here's our chart of accounts, and we have 3 new accounts: raw materials, work in process, and finished goods inventory on the asset side. So now you got 3 inventories: raw materials, work in process, and finished goods. And then we got cost of goods sold, and we have manufacturing overhead. So in the manufacturing process, those are the additional accounts. And given that we have our accounts, you will need to learn how each team will be doing this, each individual eventually, cost of goods manufactured. And you're going to notice a standard thing is raw materials, labor, and overhead. That's what, so we're showing for the amount of drinks we had, or the amount of books we made, what were the raw materials involved, what was the labor, and what was the applied manufacturing overhead, total manufacturing costs, less, less, the cost involved in what we don't complete, cost of goods manufactured. This is our new statement. The key thing is that it's got raw materials in it. It's got direct labor in it, and it's got the applied manufacturing overhead, the overhead that we estimated. Those are the three costs. So, some other things here, beginning inventory and things like that. But, that same thing we work with on a unit cost basis, materials, labor, and overhead. That's what we always work with in a manufacturing environment and with this statement. Then cost of goods sold. We see we had any finished goods at the beginning. We bring down the cost of goods manufactured. That 18,118,000 comes down. We subtract out finished goods to get our unadjusted cost of goods sold. And then the over under applied, that is when we didn't estimate the exact amount. We're gonna put that in there so we can adjust the cost of goods sold. So these are the two statements, and we'll be working through it on a problem. But you got an example of what everything sort of looks like and the income statement. So let's see. Let's just let me see if I can find another. This is just a spreadsheet that shows you stage 1, stage 2, stage 3, stage 4. So it shows it differently, and it's just showing these journal entries that are in here. So I'll review it with this, but this is something you want to, just showing you how these stages are working, and we're moving those costs all the way across. That's what a manufacturing company does. Now, I need Now, we're going to work on this problem last time, and this should be in course content. And what you're going to see is that for each part of the problem, a team is assigned. Here are our assumptions, and you see these are a little simpler than what we had before, but you don't want to make a mistake. So team 2 on next class period, you'll be responsible for coming up with the estimated unit cost, actual selling price, and predetermined overhead rate. Okay, so team 2, that's your assignment when we do this problem. So you got your assumptions here. We just worked on it on that quiz. This should be very easy to work with. You only got one direct material, you got your labor, and then you got your overhead, your quantity to be produced, your selling price multiple, and you got to get the POR. Okay. Let's see. Team 3, you got stage 1. So in stage 1, you're going to form the corporation, make that journal entry. You're going to purchase $800,000 in equipment on a note. And you're going to purchase the ink cartridges. So team 3, you'll be making these entries next time. Standard entries that we've made, you should be able to make. Team 1, you're going to record the transfer of costs to work in process. So you got the stage 2 journal entries. Ink cartridges were transferred in. Notice we bought 110,000 ink cartridges. We only transferred 100,000 in, but we can't have construction stop if there's some faulty ink cartridges, and so we buy more than we need. The actual labor was 152 labor hours at $10 an hour. And then here is where we utilize our POR. Once we calculate this POR, when we get ready to make the journal entry to apply POR, we're going to multiply that number times 152,000. So whatever number we have here, I told you we're going to use it at some point. We use it to multiply it times the actual labor hours to come up with how much overhead we think we're going to have. We have to estimate this overhead, and we've got to do this in the middle of the year, whatever, before all the costs are in. So team one, you got these costs of working to transfer the cost to work in process. Team five, you got the cost of recording the transfer of 40,000 units to finished goods. So we were supposed to make 50,000 units. Team five, we only made 40,000 units, so we can't transfer all the costs out. But what we're going to do is we're going to transfer out the raw materials cost for the 40,000. But since the workers have been paid and the overhead has been incurred, the utilities and everything, we're going to transfer out all of the labor and overhead that was placed in here. So you just got one journal entry where you're going to debit finished goods and credit work in process. So that's your journal entry. You just got to come up with the amount. Team five. Then team seven, you got the sale of the finished goods. So, and you only sold 30,000. So you got your journal entry, debiting cash and crediting sales, debiting cost of goods sold, and crediting finished goods. So team five gonna come up with the actual unit cost. We estimated that unit cost earlier, but now we got to go with the actual numbers based on the actual cost. Team four, you got to record the actual manufacturing overhead. And any amount that's over or under plan, you got to work with that. So this is team four. Team six, you're recording the selling and administrative expenses and paying the dividends. Do I have all the teams? Did I leave a team out? I don't want you to leave you out for your 10 points. Okay, I guess I got all the teams. So the journal entries are made here, actually on the Excel spreadsheet. But this is the T accounts master now. Overall, we're looking at this, we'll work on the sheet, and we're only going to look at the T accounts for raw materials, work in process, and finished goods, sales, cost of goods sold, and manufacturing overhead. So we'll concentrate on these because these are the new things we need to do. Now, all teams have got to do the cost of goods manufacturer statement, cost of goods sold statement, and the income statement. So all teams are doing this, but you're working together. You got your group meeting, go through and share and get that done. All of that is based on these assumptions. And so how do we work this problem? We go and calculate these items, selling unit costs, estimated unit cost, selling price, and POR. Then we make our journal entries in stage 1, 2, 3, 4, and 5. We post those journal entries after being made to the T accounts, but the only T accounts that I'll be looking at would be raw materials, work in process, finished goods, sales, cost of goods sold, and manufacturing overhead. Those are basically the only T accounts we need for cost of goods manufactured and cost of goods sold. And then for the income statement, I guess, we will add selling expenses in here, so you need to add these in. And administrative expenses. So as an item is being made, as that margarita is being made, journal entries are being made. Okay. So we're making the item, but we're making the journal entries to cost the item out and get all of our costs and everything together. So right now, what I want to have happen, I want everybody to fill in these 3 boxes. Team 2, you're responsible, but to get started, everybody calculate the amount that goes in the unit cost, selling price, and predetermined overhead rate. You should be able to knock that out in no time flat now. All right, what's my unit cost?
36.
I would get 36. The ink is
So
what?
$20.
Okay. Labor is what?
$4 per book.
It says 3 hours per book,
Oh, 3 hours per book. Whoop,
not 3
So
books
that
per hour. 3 hours
don't we
per book.
30, 36.
don't we multiply 36? Yeah.
36. So you're gonna have to. Everybody on the team, when you're working a problem, should work it out and then get back together, because you can see if you miss this, you're gonna miss a bunch of journal entries. Overhead is what?
$12.
12. So our total cost is what?
56 plus 12. 68.
Sounds good. 68.
Professor Boyd, where did the 12 come from?
That's our MOH. 600,000 divided by 50,000. 600 divided by 50. That's the MOH. Direct materials, labor, MOH. Okay? That's what we did all last week. What we did today. So I did that work because I want you, when you come in here, in general, you get this correct. And anybody can sort of misread it. So when we're working on a problem for the class as a whole on Tuesday. On next Thursday, each team will have a problem. What's our selling price going to be?
$204.
What's our POR going to be that we're going to use in that journal entry?
4.
Okay, so it's going to take 3 hours, so that's going to be 150,000. So it's going to take 150,000 hours, 3 hours per book. We got to make 50,000 books. So this is going to give us 150,000 hours. Does everybody see the 150,000 hours? 50,000 books, 3 hours per book. We then divide 150,000 into 600,000, and we get the predetermined overhead rate to be what?
4.
4. So because there are journal entries that are based on these numbers, they need to be correct. And so that's why I spent a whole week and gave you that hurricane and before and the margarita before, so you would sharpen down on how to make this calculation. And all the way through the final exam, you have to
Can
make
you
this calculation.
explain the last part one more time? I wasn't paying attention.
Okay. You get the predetermined overhead rate. The first number we're looking at is the $600,000. That's the total overhead. Wait a minute. You see that, correct?
Yes.
Second thing in the formula is the quantity being made, 50,000. Okay. The third thing is the selling price. It's not selling price, but productivity. It's taking you 3 hours per book. So if it's taking you 3 hours per book, then we multiply 3 times 50. So it's going to be 150,000 hours. And then what are we going to do?
We're gonna divide the 600,000 by the
150,
150,000.
and we get a 4. So you have your templates in terms of doing that, but try to understand it better. I do appreciate the question because evidently, it was helpful for a lot of people. But this is this chart, so I just know I put the overhead in, I put the quantity in, then I put my selling price multiple. If it was 3 books per hour, I would have divided, but it's 3 hours per book, so I multiplied to get my hours. Then I divided that into that. Are there any questions? So with that, each team then should be able to go and make their journal entries. So we've done a lot of the work for team 2. So team 3, what's the first journal entry? Who's on team 3?
I am Mr. Boyd.
What's the first journal entry going to be, Chris?
We forming a corporation, so we invest in 50,000. We gonna debit 50,000 from cash, credit. I guess that'll be common stock for
That's right.
50,000.
That's right. Debit, cash, and credit common stock. That's why we went over that. What's our second journal entry going to be?
It'll be a purchase of 80,000 equipment. So it'll be a debit of 800,000 to equipment, credit to I don't. It'll be a credit 800,000, but I'm not sure what we'll label it as.
If you bought a car for 800,000,
No. Oh, notes payable.
all right, no payable. Then, all right, can you purchase these ink cartridges?
Purchase 110,000 e-cartridges at $10. So I'm gonna divide the $10 by 110,000 and get my number. Then I'm gonna make my journal entry off of that.
No. You got to buy
So
110,000 ink cartridges, and they cost $10 each.
so I'm multiplying 110,000 by $10
Mm-hmm.
off my hit, and then I would.
Add a zero.
Oh, that would be the number 1,110,000.
To 1,100,000, I think.
Yeah, 1,100,000. Yeah, 1,100,000. One million one
So
hundred
what's my
thousand.
journal entry?
My journal entry will be credit. Um, debit cash, credit equipment. Since
What did you
it's
buy?
ink cartridge equipment.
What did you buy?
Ink cartridges. That's
That's
not
raw
considered equipment.
material.
Oh, that's raw material. Yeah, okay.
Yeah, we
So I
already bought
credit.
the equipment.
Okay. Oh, we already bought your equipment. So we purchased. So I credit. I'll credit cash, and I
We're
debit
buying on
cash and credit.
account. We're always buying it on account.
So, okay.
We're always buying it on.
Hold on, baby. Hold on, baby.
And what did we say that journal entry always was? Debit raw materials inventory and credit accounts payable.
Accounts payable. Okay, okay. So I'm debiting raw materials for 1.1 million, and I'm crediting accounts payable for 1.1 million.
Right. All right. All right, James. Hey, student James. Give me my transfer to work in process. And actually, A will help you out.
Uh, I know work in process debited, right?
All right. That's right.
Uh, is that cash or raw material?
Let's see. Standard journal entries, they don't change. So in stage 2, these are the journal entries.
So
So
would it be
what
cash? Oh,
now you're dealing with the raw materials right now.
okay. So it'd be raw material credit.
Right. And remember, you debit and work in process each time.
Mm-hmm.
So what you've got to do is to go through. This is listing the journal entries, and you have that Excel sheet that shows the journal entries, and the template itself, I think, has the journal entries in there. If you look at the template, so here's the first page of the template, and you only got one product. So if you were doing it, you calculate everything for the one product in this first column. Then journal entries, you come to this sheet. This is already set up for you. Stage 1, stage 2, stage 3, stage 4, stage 5. So you put your journal entries in here. It's already set up for you. UT accounts. Then here's your cost of goods manufactured and cost of goods sold. The format is laid out. You just got to put the numbers in. So this spreadsheet has everything in it. Here's your trial balance and the income statement. And right now we're just going to the income statement. But you've got the spreadsheet in course content. So you're going to work that problem that way. So everybody's working together on the problem for Tuesday. 10 points, point off for everything that's wrong. That's just one grade for the whole class. Then on next Thursday, each team will work a problem by themselves. So you be in your room and you have your problem to work by yourself, each team, then we'll probably do some multiple choice and review work on Tuesday of midterm week. Then on Thursday of midterm week, you should be ready to run that margarita bar and make those journal entries and have it operate. It'll be a simple margarita bar, and I may just have a couple of raw materials in it. But I may use that as an example. Well, it depends on what you want. You want a book or you want the margarita? Well, think about it and see which one you want. We can do the book or we can do the margarita, whichever one strikes your fancy the most at midterm. So this is manufacturing accounting, and so we reviewed because we gone into this day one. It's assuming, as you can see, that you can do the basic things. Are there any questions?
You gonna open that quiz back up?
I was just about to ask the same thing.
I
Was
just
your
got in the
was,
last 10 minutes.
was your camera on?
Yeah, my camera's on the whole time.
How about yours, Chris?
Yeah, my camera. I was on there driving it. I ain't missed class. I was driving and listening the whole time. My camera was on though. How you think I was
Oh,
asking
man.
questions and getting the answers? but I do have a question, Mr. Boyd. I did miss class Tuesday, and I missed. Like I'm trying to catch up on what I missed. Do I have an opportunity to do that or no?
We'll see. Yeah, I got your email about that, Will. For situations like that, we understand. So, if
All right,
something
appreciate
comes up, the thing is we got a team project. Let your team leader know, because you're the team leader, aren't you? Are you? Let the
it.
team
Nah,
leader know.
I think Benny, my team leader. Yeah,
Okay, so you let Benny know, and if emergency come on, we'll work with that. Okay. All right. So let me go and open this up for a couple of hours, so you all can finish up. So you'll be able to do a second submission. Anything else for the good of the cause?
My camera was on too, Mr. Boyd.
Who's that saying the camera's on? Cannon? Your
Canary.
camera's on?
Yeah,
Canary?
Canary City. Yeah. Mm-hmm.
All right. So what I'll do, I'll open it up, and and so you can do a second submission, and that'll be due sometime tonight. Shouldn't take you that long now, but you want to go through and be working your part. Your team needs to be working on this part for Tuesday, because this is just 5 points or so today, but Tuesday's a 10-point day. Eventually we get into a quiz. So Thursday's actually a 20-point team quiz. Each team working by themselves to get it done. So you got to be paying attention. And then on next Thursday, we'll do some multiple choice and review for the following Tuesday, excuse me. Then your midterm exam, we should be ready for that. Hopefully Thursday of midterm week. But we won't rush it. We'll see where we are and we'll go from there. Any further questions? Okay, so I'm gonna